and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the RBI's monetary policy decision that will be coming out at 10 a.m. today. We'll be talking about the cues for trade, and we'll also be talking about all the stocks that will be hogging the limelight in today's session. And if you have any stock-related queries, send them in to us on our live feed, and we'll have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Well, Wall Street end mixed. The Dow Jones gains while the Nasdaq and S&P 500 correct as the job market shows signs of cooling. Asian markets trade largely low on weak cues from US peers. The SGX Nifty is signaling a lower start for the Indian market. Gold rallies to 52-week highs as fears of an impending slowdown in the US market triggers a rush to safety. Crude trades flat as investors weigh output cuts and chances of an economic slowdown. It's RBI decision day today. Majority of economists expect a 25 basis point rate hike this time around. All eyes will be on whether or not the central bank will change its stance to neutral from withdrawal of accommodation. Well, as I mentioned, it's RBI D-Day today, and who better than Dinesh Unnikrishnan, who's the banking editor, to put into perspective what we can be expecting from the RBI's monetary policy today. Good morning, Dinesh. Good to have you in the studios today. Tell us, is a 25 basis point given this time around? And, if at all it happens, would it be the last one?
Good morning, Nandita. Thank you for having me on the show. I always keep saying that the last thing I would do is predicting RBI policy outcome because it's virtually impossible. They can always come with surprises. But having said that, yes, as you said, it's quite possible that, a 25 BPS final round of rate cut happens today. That's because if you look at the comments of the MPC members over the last 1 year, they have been consistently maintaining that, if while the worst of inflation may be over, the war on inflation is still on, and they want to take it to the logical end. So clearly, there is no comfort, to my understanding, on the part of MPC members to lower the guard on inflation unless the CPI comes to the tolerable band, which is 2 to 6%. Which has not clearly happened now. If you see, in February it was 6.44%, in January it was 6.52%. I have no reason to believe that in March it will be below 6% unless there is a big surprise. So what has changed from the last policy and this? As far as inflation is concerned, nothing really. Also, you must note that the core inflation, which is the non-food, non-oil part of the inflation, still remains very sticky and a major worry for the policy makers. So considering the stickiness in the headline inflation and core inflation, I think that one more round of rate hike will be warranted. Having said that, one shouldn't be surprised if there is a pause with a cautious tone.
Right, a pause with a cautious tone may also be expected, but a very few economists believe that would happen. Exactly. Majority expected 25 basis point rate hike. But tell me, what would you be watching out for from the governor's statement? Would there be a change in stance or any downward or in fact upward revision in inflation estimates, or what is it that you will be looking out for?
Well, that's an important question, Nandita. See, more than the rate action itself, like I said, a 25 BPS rate hike is already factored in by the markets. Even a pause will be, is part of the expectations. But more than the rate actions, what I would personally watch for is 2-3 things. One, what is the language and the tone of the monetary policy, of the governor, which has been clearly cautious over the last 2-3 policies particularly. So, will we see a more dovish policy this time? Will we see a hint that we are by the end of this fiscal year we might see some hints of a rate cuts to prop up the economy? So I will be really eager to see the tone of the overall language. One. Second thing, the inflation itself, which is projected at 5.3% for FY24. I have my a feeling that they might go revise it upwards, considering the kind of sticky nature in inflation, and there are also global factors that are playing out. Also, one should see very important what the governor says on growth, which is 6.4% projection, which is for FY24. Right now, as we speak, there are fresh concerns on a global recession that is unfolding in the US market. And we have seen overnight stocks falling I haven't seen the latest numbers, but my understanding is that, you know, the markets are pricing in a possibility of a recession, which is having its, you know, tidal impacts across the world markets. So the RBI cannot stand in isolation and, you know, take an isolated point of view. The idea of decoupling itself is not relevant at this point. Everything is highly interconnected.
Right.
So one needs to very cautiously watch what is the outlook on growth. I wouldn't be surprised if they lower it from the 6.4%. That's another thing one needs to watch.
Okay, growth may be lowered, and you never know if inflation estimates are revised upwards.
These are possibilities.
As well.
That's right.
You know, given the fact that El Nino risks are there, unseasonal rains, and, you know, high milk prices and sugar prices. So we will be watching out for the RBI governor's tone on in his whenever he makes his statement at 10 a.m. And of course, we'll be getting you live coverage on that. So do tune in at 10 a.m. But with that, Dinesh, thanks a lot for taking out time and joining us and sharing what you're expecting from the RBI governor this time around.
Thank you.
Well, let's shift focus to market technicals now. Rahul Ghose, who's the founder and CEO of HEDGED, is joining in this morning. Rahul, good morning. Good to have you on the show. 17,500 hurdle crossed, even though, we did end the day with gains to the tune of 100 points or thereabouts yesterday. Some bit of caution may creep in today, given the fact that we have the MPC outcome at 10 a.m. So what are the kind of levels that you'll be watching out for in today's session?
Very good morning, and thank you for having me. So if you look at the last 11 or 12 years of data of Nifty, you will find that every time Nifty formed 3 red monthly bars, that is 3 red candles on the monthly chart, it has always led to the 4th candle being green. If you check the last 10, 12 years data, you will see this very evidently. So last month was actually the 4th month. And even though it wasn't a red candle, you noticed it was a doji candle, which shows indecisiveness or shows that the current trend is pausing. Now that implied that the downtrend which was happening, which was an intermediate downtrend, paused. And the close that happened yesterday was above the 200-day moving average of Nifty. Now it's very important to understand that Nifty is actually in a smaller uptrend in a larger sideways trend. Having said that, our stance is going to be to buy on dips. Our levels to go long will be between 17,250 and 17,350 of Nifty. Now, why am I saying that? If you look at the current closing of the spot chart of Nifty, there is a congestion zone between 17,650 and 17,900. Now, this congestion zone will actually slow down the rally a little bit. And anytime there is a pullback from this congestion zone into the range that I mentioned, we will look to initiate a long with at least a 250 to 300 point target on the upside.
Right. So those are the levels to watch out for on the Nifty. Let's also talk about, tell me, what would you be expecting on the Bank Nifty today? And, since it is an important day when it comes to a policy decision, do you expect any kind of an up move in the banking stocks if, a 25 basis point rate hike, as is widely being expected by the RBI, comes out at around 10 a.m.?
So just like how Nifty is coming very close to a congestion zone, even Bank Nifty is very close to a congestion zone. And this is between 41,000 and 41,800. The buy levels for Bank Nifty is at 40,200 to 40,400. So once you see Bank Nifty dipping below 40,400, which is 1% below the current market price of Bank Nifty, that is where we look to initiate a long. And if you want to go aggressively long on Bank Nifty, if you see Bank Nifty rallying, wait for it to close above 42,000. And once you see it closing above 42,000, which is outside of the congestion zone, then one can aggressively go long there again. A popular choice right now for today would be that to get into the event with 41,000 short straddles, with probably having offset units before the event, because generally volatility is slightly higher before the event. And today being expiry day, the offsets will help us in case of any sharp moves as well.
Right. So levels to watch out for on the Bank Nifty. Let's also talk about individual stocks then. Well, the stock of the day for me today is DMart. It has come out with its Q4 business update, and standalone revenue has grown somewhere around 20% on a YOY basis, and total number of stores as of March 2023 stands at somewhere around 324 or thereabouts. If you look at the stock, it has been in an uptrend over the last 5 trading session or so, even though on a YTD basis it has lost somewhere around 10% or thereabouts, and it's way off its 52-week high of 4,600 levels or thereabouts. But given the fact that the business update is pretty healthy, do you expect the stock to trend higher from here?
Definitely, yes. In fact, we believe that DMart is actually coming out of a very long bear market. So it is formed, there's a very popular candlestick pattern which is broken out, and it's broken out on the upside. If you look at the weekly chart, there is a breakout from divergence. Momentum is there on the upside. Today's closing will actually be very important, because today's closing will make sure whether it is closing above the 200-day moving average on the weekly or not. So if you see today also having a bullish closing, then one can definitely initiate a long for the short term in this stock.
Right. We had a query on DMart from Ajay Riker. I hope this answers your query, Ajay. Let's move on to the next stock then. I would like to talk about Nykaa. Even that company has come out with its Q4 update. FY23 revenue growth is expected to be in line with the first 9 months of FY23, and it's the beauty and personal care segment that is expected to drive growth for Nykaa. A lot of analysts of late have turned bullish on this counter. What are the charts suggesting when you look at it?
So Nykaa, if you look on the charts, has actually never been able to cross its 20-day EMA of the week. In the weekly chart, if you do a chart check, you will see it goes every time to the 20-day EMA and automatically it reverses back. So till the 20-day EMA gets taken out, which is around the 160, 165 levels, we do not initiate a buy in Nykaa. So if you notice the pattern in this stock, and if you notice the pattern in most of these startup stocks which have gone beaten down over the last 6 to 12 months, it rallies as a technical pullback, comes near a very important moving average, and then retraces back. And this stock is no different. So from a short to medium term perspective, I wouldn't suggest a buy until at least 155, 160, those levels get taken out.
Right, so that's the view on Nykaa. Let's also talk about Equitas Small Finance Bank. Q4 updates are pouring in thick and fast ahead of the earnings season. It has clocked a 36% YOY growth in its Q4 gross advances, and total deposits are also up somewhere around 30%, which is quite healthy on a YOY basis. Disbursements have grown by 80% on a YOY basis. Now, if you look at the stock, it has done pretty well on a YTD basis, up somewhere around 10% or so. And even in yesterday's session, it was under pressure, 3% down. But, over the last 5 sessions, it has done pretty okay for itself. So how would you advise investors to play this one now?
So if you look at the Equitas daily chart, it is currently at a demand level, which means that until the 60 level gets taken out, it is still a buy. So it has been holding the last 3 days. One day has been bullish, one day has been bearish, and yesterday, like you mentioned, has been bearish again. It is in the bearish move also, it is not closing below its short-term moving averages, which is a good sign always for a stock. So it's in a demand zone. It is not closed below its short-term moving averages. Currently also, it is in a buy level. However, if you look at it from a short-term perspective, one can hold on keeping a stop loss at 60. But if you have maybe a 3, 4, 5 day perspective, I would suggest that there are better counters which are more momentum driven to hold on to rather than Equitas.
Right, more momentum counters could be looked at instead of Equitas. Let's also talk about the banking pack as a whole. I know we did discuss Bank Nifty, but there is a report from CLSA on banks, and it believes that Q4 is likely to be extremely strong for banks with record margins. In fact, NIMs could nudge up in the quarter gone by, and it's a commentary that will be watched out for FY24 when it comes to the banking earnings. In fact, ICICI, Axis and SBI are the preferred picks from CLSA. We also have a couple of queries coming in on some of the banks. Satya CK has written in, and he wants to know your thoughts on IDBI and PNB. He wants to know whether he should be holding on to them or averaging out at current levels. So what would you advise investors to do with some of these banks, and also banks like Axis and ICICI?
So if you look at the structure of most of the public sector banks, be it IDBI, be it PNB, be it Canara Bank for that matter, all of them have a similar structure in place where they are all at a resistance level. This resistance level, I beg your pardon, is 2% away from current market price. So any close Beat IDBI, the exact level is 48. It's currently at 46.15. Canara Bank, it is 290. It's currently at 285. So any close above these resistance levels definitely is a bullish sign for the stock. In fact, I would go up to saying that between the private sector banks and the public sector banks, the public sector charts are looking to break out in a more eminent fashion, right, rather than the private sector banks. I wouldn't advise the gentleman to average right now. I would wait for a breakout to happen. And once the breakout happens, depending upon what levels he's picked up the stock at, to hold it rather than averaging in an existing public sector bank.
Right. Let's also move on and take another query on Apollo Tyres. Dev has written in and he wants to know your thoughts on this counter. It's slowly and steadily moving towards its 52-week highs now. So what should one do with this one?
It's definitely a lovely chart, Apollo Tyres. If anybody is held on, if anybody is holding on to it from even at 325 or right at the high level of it or of its 52-week high, they can continue to hold on. The stock is making a beautiful higher top, higher bottom formation. The momentum indicators support this. It recently also broke out from 311 levels, which was its last given resistance. So definitely looking good on the charts, can continue to hold on and look for higher targets. I, in fact, expect this stock to go towards its recent high, which is at 344. It's currently trading around 320. So definitely hold on would be our advice.
Well, hold on to Apollo Tyres. The chart is looking lovely as per Rahul. Rahul, next query is on Muthoot Finance. Bikram Murmu has written in and he wants to know your thoughts on this counter. Even though on a YTD basis, it hasn't really done all that well, but gold prices back home have hit a record high, right? So what should one do with the Muthoot Finance and in fact, even the Manappuram Finance right now?
So if the gentleman or lady is already in Muthoot Finance, I would definitely recommend him holding on. The reason because, again, if you look at the 8 or the 20-day, if you look at the short-term moving averages, it is not closing below them. Every time it comes to them, takes support and goes up. The momentum indicators are not yet oversold, which means there is still momentum on the upside. So what the gentleman can do is keep a stop loss at about 960 odd levels and continue to hold on for higher targets. The 200-day moving average is slightly still far away, which means that it's not fully in a longer term uptrend. But in the intermediate, definitely you can expect some upside, keeping a stop loss at about 960 odd levels.
Well, keep a stop loss at 960 odd level. Yesterday we had the management of Ease My Trip on my show, and we were discussing how, even a recent surge in COVID cases, he expects that it won't really dampen the excitement around vacations or summer travel for that matter. We have a query on that stock from Sonu Yadav, and he wants to know whether it's a good investment case right now. So what would you advise him to do?
No, so as you rightly said, the COVID cases are actually rising, and when this sort of situation happens, sentimentally itself the stock tends to be little perturbed, even though it might not actually lead to less travel. So if he wants to enter rather than entering Ease My Trip, I mean, there are a lot of good charts right now. There's something like a capital goods counter like L&T he can look at. The life insurance companies are also looking very good on the charts. It's coming out of a long-term bear market from the time the budgets were announced. So there are better stocks to pick rather than going in for Ease My Trip, would be my opinion.
Right, there are better stocks available. So look for some of those quality names. Next query is coming in from Tariq Ahmed. And he wants to know your thoughts on Sun Pharma. Stock hasn't done all that badly over the last 5 days or so. Time to take position in this one?
So if you look at the pharma pack, definitely Sun Pharma is one of the better names if you compare it to Oro Pharma and the others. Another stock that he can possibly look at, Glenmark. Glenmark also is having a good formation on the charts. But Sun Pharma specifically, yes, he can definitely continue to hold on till about 970 on the chart. So he should keep a stop loss at 970 and continue to hold on. Also, if you look at the Elder A bands, which is a popular momentum indicator used, they are also supporting this move that is currently happening in Sun Pharma. And if you look at the larger time frame chart, which is the weekly in Sun Pharma, it is closed yesterday above its 20-day EMA. So hold on to it, keep a stop loss of 970 and look for higher levels.
Right, that's the call on the pharma basket. Let's also talk about some of these railway stocks. You know, RVNL is one stock that has been in focus because it has won a spate of orders in the last few weeks. And, you know, if you look at the stock over the last 5 days, it has gained somewhere around 14% or thereabouts. So how, you know, more upside on the charts? It is moving towards its 52-week highs of 84 levels or so. But do you expect it to surpass that and touch 100 levels anytime soon?
No, there's nothing, unfortunately, that suggests that on the charts, and 100 is quite a while away. If you see, yet the stock is in an uptrend. Yes, it is making higher highs and higher lows. It is broken out of an important support. It's gradually going up. It's actually founding a rounding bottom, as we say in technical language, and a breakout from a rounding bottom is definitely a good sign. However, it is oversold currently on the charts, and it has a very strong resistance around the 80 to 85 band. So purely from that reason, it is not the best buy to initiate right now.
Right, not the best buy, even though the stock has rallied somewhere around 13% in the last 5 to 6 trading sessions. You know, I want to take in, squeeze in one last query on the show. This one is on BEL. Abu Bakr Jasim has written in and he wants to know your thoughts. Is it a good buy for the short term? What would you say?
No, I wouldn't recommend BEL on the short term, even though it is looking slightly bullish on the chart. Rather, I would advise the gentleman to look at Reliance. Reliance is actually having a divergence on the weekly. It is bouncing from a weekly support level. There is an intermediate demand zone between 2267 and 2275. So around that band, he can initiate a long, keep a stop loss below 2450, I beg your pardon, 2180, and look for a target of 2300. That would be a better counter to bet on because the structure of the chart of Reliance is definitely looking good.
Well, I can see that Reliance was one of your stock picks for the day as well. In fact, we have come to the end of our viewer query segment. So share some other stock picks for the day as well, aside of Reliance Industries.
Yeah, so another counter that we're looking at is HDFC Life, as I mentioned earlier in the show. So HDFC Life, from the time the budget happened, it has been in a stellar downtrend. And finally, it has come out of that downtrend and from a very important support level is looking to move up. The current market price is around 507, 508, above 511, which is a less than 1% away. One can initiate a long. There is also an inverse head and shoulders, which is a very popular pattern that generally people use in technical analysis. It is looking to break out of that pattern. So 511 buy, and they can hold on to targets for 522 and 527 respectively. So that's another stock pick that people can look at. L&T is also looking very good on the charts. So even at current market price, people can initiate a long in L&T, keep a 2% stop loss. Below the 20-day EMA specifically, and look for higher targets.
Well, those are the stock recommendations coming in from Rahul. With that, Rahul, thanks a lot for taking out time and joining us this morning and addressing all of your queries. Well, with that, we're completely timed out on this edition of Morning Trade. But before I go, let me tell you that we will be getting you live coverage of the MPC policy decision that will be coming out at 10 a.m. So don't forget to tune in on Moneycontrol and check out all the action because we'll also be getting you a battery of guests to decode the policy outcome as well. Well, with that, it's a goodbye from me for now, but don't go anywhere because coming up next is opening bell.